Thank you for staying tuned. The equities market resumed trading today on the downside, trading 0.86% low at intraday. Now let's get a sense of the state of the market at the moment. Temple Ashaju joins us. Hello, Temple. Good afternoon again. Now, what is the mood of the market at the moment? What has changed from the opening figures?
Well, it's really negative. It's in the red zone as we speak. We're down some 1% basically. Earlier it was 0.94%, and then it moved forwards to 0.99%. So right now we're seeing losses at the region of 1%. The All-Share Index, which is the key benchmark indices of the Nigerian Stock Exchange, is currently back to the 30,000 psychological position, and you've seen some close to 200 million units of shares traded in the markets today. In terms of volume and in terms of value, valued at 1.42 billion naira. We've seen all of the gains that Dangote Cement recorded yesterday eroded today. We've seen it down by some 2.63%, and it's back to 1 naira 85 kobo. That's the position that it hit as the market opens this morning. Other firms that we have in the negative territory, other than losing steam as we speak, are Stanbic IBTC, which is also pulling down the indices of the subsector, that is the banking sector. Stanbic IBTC is down 2.11%, Guinness is down 1.35%, Unilever is down 1.52%, while Zenith Bank is down 0.63%. That's what we're seeing, and we're not seeing so much of companies doing positive as we speak right now. The market breadth is currently negative, though it has been fluctuating, but it's more negative as of a few minutes ago that we checked. It's only WAPCO from the industrial goods sector that is able to move up a little. And in terms of sectoral analysis, that is not too favorable because it hasn't changed. The heavyweight in that sector, Dangote Cement, has lost more than 2%, if not 3% right now as we speak. And that brings the industrial goods sector down by 1.72%, while the banking sector is down some 0.15%. Ditto for the consumer goods sector, which is also seriously losing steam. If you look at the worst performer in terms of the top trade segments of the market now, FBN Holdings has lost so much by some 1% in the market, and it is the most actively traded. About 800 million units of its shares now have declined, and it is currently accounting for about 60% of the entire transaction that's taking place in the markets today. Chimeze.
Now, what factor would you say is really driving this negative sentiment at this time? Or is it just about profit taking?
It's just the risk of sentiment of investors. Well, a bit of profit taking, but proportionally that is not so much in the scheme of things. What we've seen so far as I'm concerned, and a few analysts that I've spoken to, as well as traders are concerned, is that the risk of sentiment of foreign investors is back in the markets again. You will recall that a whole lot of investors, domestic investors mainly now, have keyed into a lot of stocks with fundamentals in the system, hoping to benefit from the December rally, which everybody knows about. But then you have the foreign investors, offshore investors, who are still waiting on the sideline, are looking at taking profit as well. That is there. So, but then you still have the load shedding as a result of election that is just around the corner. The general election is just a few months away, February 2019, and as the closer we get to it, the more we will see the activities of offshore investors who still have a bit of stake in the market and are looking to quickly exit before the tension of general election really sets into the system. However, I should let you know that for investors who are also considering a bit of diversification of their portfolio, the federal government today announced for subscription the 7-year 100 billion naira Sukuk program that investors can actually lock into. It is something that is coming at, I think, 15% or thereabout, 15.74 percent in terms of the interest rate. That's the return that investors will get. For the maturity or the tenor, it is 7 years, and the fund is to be paid back to investors in terms of rental income now. That will be paid to investors a half year. It is something that comes with a whole lot of benefits. So if you're tired of putting your money in stocks, or you're concerned that you can't wait for too long to put your money in stocks, then what you can do is to put your money in this particular security, which is also tradable on the Nigerian Stock Exchange and, of course, the FMDQ OTC. It offers regular cash inflows, rental income payable half year. You also got your rental income being tax-free. You have the fact that it is risk-free, and it helps you to just diversify your portfolio the way you want it. Chimazie.
All right, thank you very much, Temple. See you later. And a probe into accounting irregularities at Steinhoff International and the release of the retailer's restated results have been delayed. It's sending its shares down as much as 21%. The company, engulfed in one of South Africa's biggest corporate scandals, said it had been forced to abandon plans to publish both its 2017 and 2018 financial statements by the end of January 2019, citing delays to a forensic investigation being conducted by auditors PricewaterhouseCoopers. The investigation is being carried out a year after the owner of brands, including Francis Conforama and Britain's Poundland, admitted to accounting irregularities, sending its shares plunging and leaving it fighting for survival. Steinhoff said its group audited financial statements would now be released by mid-April 2019, with the probe by PwC expected to be completed by the end of February rather than the end of this year. And Uganda's central bank has retained its benchmark lending rate at 10% on the back of improved inflation figures. According to the central bank governor, core inflation edged down to 3.4% last month from 3.5% the previous month. He also says that rate is expected to peak at between 6 and 6.5% in the second half of next year, lower than the previous forecast. Policymakers raised rates for the first time in 3 years in October, citing concerns about rising inflationary pressure. And Kenya's central bank has set its next rate-setting meeting for January the 28th, 2019. The date was announced by the bank's Governor Patrick Njoroge at a news conference in Nairobi. At its last meeting of 2018 this month, the bank held its benchmark lending rate at 9%. And Tunisia's inflation rate remained stable at 7.4% for the third consecutive month this year. Official data shows that inflation has fallen from 7.5% in August and 7.8% in June. Tunisia's central bank raised its key interest rate by 100 basis points to 6.75%, the second hike in 3 months, to tackle inflation in May. And that's it on the program. Thank you very much for watching. I'm Chimezie Obi Iwagu.